Welcome to Money Info, brought to you by Princeton Research with Mike King in Las Vegas and Charles Moskowitz in beautiful Boston. And want to let you know that we know where all you listeners are. Isn't that right, guys? We know where every one of you guys.
Tampa.
Oh yeah, and is Casey with us?
Yep, I sure am.
Hey, how are you? And Charles Moskowitz, and of course our newest sponsors, Bloomberg News and the IRS. So we know where all you listeners are.
Hey, Greg, the guy doing the news, was that Frank Zettapani?
Yes.
Well, has he been around for like 200 years?
Actually, I think he got his network job when he was about 22, seriously. You are right. He's been around for just a lot of years.
I was surprised when they heard him, announce him.
Because I think you had him in Boston. I was
going to say, I know we had him here.
Oh, yeah, for a long time.
And I think we had him somewhere else, maybe even in New York.
Definitely. He was at WCBS, yes.
Yeah?
Yeah. Oh, yeah. Yeah. Interesting stuff. Well, it's been kind of a dull week, guys. Nothing going on.
Yeah.
Oh, my. Could anything get crazier with the IRS thing? And then Bloomberg gets in the middle of all this stuff with their computer terminal. What is all that stuff?
Well, evidently it sounds like they can't really track what the searches are, but they definitely know when you're on an off-it, or anybody can know when you're on an off-it, which I guess would be helpful if you hear rumors of some sort of major problem, and then all of a sudden you see, John Kerry, Ben Bernanke, and, 14 other guys all getting on it at the same time, in the middle of the night or something. But, who knows?
Amazing stuff.
And welcome to the 8th straight Bullish Tuesday.
18th.
No, this is the 8th, 8 in a row. There was interruption, if you go back 8 Tuesdays, including this one, the 9th one back, which brings you into March. The third week of March was a down Tuesday.
Huh.
Well, I'll tell you one thing, guys. There's been a lot of down Tuesdays for Dell.
Yeah.
Ooh. Man.
By the way, I'm going to go on record here and say that while it's not the kind of trade that we tend to make, but I was thinking about buying the Tesla expiring on Friday, 85 puts this morning at $1.75, and just buying a handful of them because the chance of it going to a 100% loss is dramatic. I mean, it's very weighed in that direction. But I think that Tesla has probably had it here for a little while. I mean, the stock is up from basically
35. If you go back to when it just broke above the 50-day moving average, which was back March 25th.
Right. In any event, I'm going to go on. I think that the stock has had it here. Maybe not forever, but I have people that I talk to who were excited to be selling the March 50s that they had, paid a couple of dollars for when the stock went to 52. And looking at it now, that was only the beginning. I mean, even from the $52 area, I mean, the stock has been $94 this morning a week later.
Wow.
That's some impressive sales numbers, from 5,000 units to 20,000?
But think about that, 20,000 units. So what?
I mean, drop in the bucket globally.
Exactly. I mean, it's not the kind of stuff that even in better times anybody in that business would look at and say, geez, we have a problem.
Well, but it's a unique automobile, Charles. I mean...
Okay, I understand that.
Yeah.
And that's fine. But is it unique enough to have the market value of the company triple or quadruple since the beginning of this year? I mean, I just think, there's a big short squeeze in it, and the thing has gone parabolic. And I'm going to, I'm on record here saying that Tesla at expiration on Friday has traded below 80, and it's currently 91 and high change.
Okay. Well, see,
and it's still up $3 on the day.
I could see Casey over in Tampa styling in one of those things,
I would. If they can make one in an SUV, I would love to.
And the impressive thing about it, this is a technical trade. This has nothing to do with the fundamentals of the company.
Right.
But, I think that report that was out, who was it, Car and Driver or whomever, I mean, the guy was very specific about it. And he said we gave it a 99 out of 100. And, he went on to say, to qualify it, and this was the more impressive part from my perspective, this is not the best electric car. This is the best car.
Really?
Oh, yeah. They said, we're not rating this as an electric car specifically. We're rating this against all cars, and it gets a 99 out of 100.
Wow.
I mean, that's impressive.
Interesting stuff.
Yeah. Anyway, so we'll see one way or the other. Basically, with our rules, number one, 50% down would almost positively get stopped out if I'm wrong. And the 100% up rule would be, kind of out of order also, because my guess is that if I'm right on those $1.75 calls, they're going to be $10. And, it's, from my perspective, if you have a bunch of money, you can throw $300 or $350 at two of the calls. And if they go worthless, they go worthless. And if they go higher, then, you have a hell of a ride.
What was that, Mike?
Which puts did you want to buy?
The expiring, so the March, 85.
The May 85s.
The May 85s, right, May. And they opened this morning and got down to $1.30, and they're currently $2.50, $2.60. But, you think about it, the stock is up $3.37 at 91 and change. Frankly, if it just goes to unchanged on the day, these things are going to double from where they are right now. Just to unchanged. Forgetting about the fact that it was up, 14 yesterday and 8 the day before and 6 the day before that. I mean, it would have no trouble getting back into that $78 to $80 area.
Wow.
Anyway, be all that as it may, Mike is right. The market looks great here. It's very strong. The news has been, kind of Goldilocks-ish. I hate to use that term because a lot of the talking heads are picking it up again after, after we had that Goldilocks market 2 or 3 years ago where that was their tagline day after day after day.
Yeah.
But
I'll tell you, Charles, what I thought was interesting, you and Mike talked about watch out for Sony, and that was probably 2.5 to 3 years ago. and today there was a fund manager that is urging...
Dan Loeb.
Urging Sony to sell off its entertainment unit. It's like, oh my goodness! I mean, that put a feather in both of your caps there.
Yeah.
You saw this a long time ago.
Hardware side of it really becomes commoditized.
Yeah.
Very quickly.
Yeah.
I mean, let's go on to another company here and discuss it. You see something that Sony puts together, feed it into one of those 3D printers, and you got a copy. I mean, have you seen what those are? They're just amazing.
Oh yeah, they can build anything. It's it's mind-boggling. It really.
There's a guy somewhere out in the Midwest I saw this morning who put together a robotic hand for his kid who had a problem with one of his hands, and he did it for like $600, and the kid's got a prosthetic that works.
Wow.
You know, the big issue with this is guns.
Right, and that's, and obviously Congress is already looking into that. It's,
As well they should.
Yeah. Well, what's intriguing to me, Casey, your opinion on all this stuff that's seems to be swirling around D.C., it doesn't seem to have affected the market at all. I mean, whether it's the IRS stuff or all the other stuff, it's just like the market just keeps plodding along.
Well, there's so limited places to put your money. Bonds are dead. Who's gonna sell for 1.9%? If you want yield, you have to go to the stock market. If you want capital appreciation, you have to go to the stock market. So there's, you take one of the big arms out of the pot, and it really narrows your options.
And frankly, the currency side of it helps dramatically too. No matter what anybody says, the reserve currency is still dollars.
Mm-hmm.
I think this thing with Dell is just fascinating. The fact that Dell's board is requesting further information absolutely blows my mind. I mean, Carl Icahn has put together a fantastic deal, and so far superior to Dell's deal. The fact that they're not tripping all over themselves tells somewhat of a story to, I don't know, possible collusion. Who knows?
Yeah.
Well, that assumes, Casey, that they'll be able to do something with the monumental amount of debt that they'll have to take on in order to pay that dividend.
But that stock is going to be worth more than $1.65. Anybody, just their assets alone, would argue that. Which
it's
at $1.65, it's a par deal.
This is one of the really, really tricky balancing acts that any company wanting to essentially go private goes through. They know, as does everybody else, that they have faith in it and that it will be worth more or they wouldn't be doing the deal. But they don't want it to be worth so much more that nobody wants to take the deal. I mean, this is not exclusive to Dell. It happens with a lot of these companies who do it. Yeah, we're good, but we're not very good, but we're not very bad either, and it's really walking a fine line.
I can see some value in their software business. Clearly, hardware is not the future, right. And I don't know what it is that he sees, but he clearly sees something in their software side that has tremendous value. And he's let's face it, he's right more than he's wrong. If I have to put my money on one side of the wheel, it's certainly going to be his.
Yeah, that's intriguing. The other the across the pond type of warfare that's been going on is in the wireless side with Verizon and European partners Vodafone. But apparently they got together and pay a $7 billion dividend to its co-owners, which I think is kind of fascinating. Verizon owns 55%, will receive $3.85 billion, and Vodafone will get the rest, $3.15 billion. Not bad. Not bad. Of course, the technology is changing so dramatically, almost as we speak. As Casey mentioned, obviously we've been trying to launch this television thing here. There is a company now in Europe, in the Netherlands, that is now with software, all software, has managed to create everything that we were looking at in hardware in software, including the automation system. So it's just shaking my head. And the problem is, do you really trust a company that's headquartered in the Netherlands for service? I mean, that's the downside for us here. Although they'd like to use us as a guinea pig, and obviously we'll do that. But yeah, it's kind of interesting. Yeah, it's called Vitigo, and they made their debut at the Broadcasters Convention in Las Vegas last month.
Oh, you know what else is getting a phenomenal amount of press now? They were all over it yesterday again on TV with people like Barry Diller and a couple of others. That network.
Oh,
What's
Aereo?
the name of it? Aereo.
Aereo. The network, they're thieves. I mean, they're taking off the air signals. You can't do that. I mean, I would imagine. And knowing Barry Diller as well as I do, I think, usually whatever he touches turns to gold. But this one, I think may be a clinker. I don't know. I just don't know, because now you've got a second network out there that has threatened to drop its broadcast side. Of course, nobody will miss it. It's NBC. But seeing that they don't have any top 20 shows, but still, if all of a sudden you've got two of the four major networks that are not going to be broadcast companies anymore, I think you've got a real problem. A real problem. Because, I mean, everything's going to lead to pay anyway, no matter what. I mean, it's all going there. You had the announcement last week about the NCAA Final Four, the fact that they're moving to TBS. Well, there's a reason why they're moving to cable, because they're going to move to pay cable very soon. So
Right.
The events that we know, like the Super Bowl and like, the Final Four, all the other stuff, that's all going to be pay. I mean, it is all going to be pay, like it or not. So, I mean, that's where it's going.
Senator McCain just introduced the bill again to make it all a la carte, make all of TV all cable a la carte, so that instead of the bundling like they do now.
See, now that's a shocking bill. If you're a cable company, that is truly a shocking bill. But I agree with him. I mean, I would love. I mean, when I start thinking of what Carol and I watch on television, there may only be like 4 channels. And like
I could give an absolute rat's rear end about the Kardashians or what shenanigans they have going on. I have no interest in Bravo, so why am I paying for it?
Well, KC, that's quite a rear end, by the way. Oh, I'm sorry. I should
now.
But no, you're right. You're right. And the average person is probably only going to look at maybe 4 or 5 channels. So there again, why should you pay for 300?
So what's it going to cost me to watch the Super Bowl?
My guess, maybe $20.
That stinks.
Well, you're still going to have to watch the advertising, Charles.
I know. That's why
it's not going to go away. But yeah, I mean, eventually, and our generation will probably won't see this, but Casey's will, where all this stuff is going to be on a pay tier, like it or not.
You know what? This is an interesting business model. I would actually pay them $20 to not show the Kardashians on my TV.
Oh, man. Oh, okay. Yeah, well, that's a possibility, too. Call Senator McCain. I'm sure he'll work on that. But
What is that, the anti-pay-per-view, the pay-per-not-to-view?
That's right. Yeah. No kidding. Well, getting back to, Charles, how much do you drive? Could you buy an electric car?
Yes.
You could.
Yes.
KC, you probably drive too much. You drive too much probably for an electric car, right? Or do you?
I drive too much for an electric car, yeah.
Okay. Mike, what about you in Las Vegas? Do you drive? Yeah. Could you drive an electric car? Or do you drive too far?
No, here in Las Vegas, everything is pretty close.
Okay.
I mean, you can go 7-8 miles and get anywhere. To airport, the Strip, and 90% of the homes.
Okay.
It's a very concentrated city.
So unlike a Los Angeles or a San Francisco, well, actually San Francisco is a good walking town. You can function well with an electric car. That's interesting because now I see Carol and I not driving all that much anymore. We could probably get by with an electric car. So that's what, three out of 4 people here in this panel. Yeah, and of course, Casey, you do a lot of driving the kids around. So yeah, that makes a lot of sense.
I mean, you got to remember, I live in a town of 11,000. I mean, I can go from one end of town to I can go from one end of town to the other end of the town next to me. And
wow.
It's still only 9 miles.
Yeah, I know. It's fast. It's
but I mean, the other thing is that I don't know what the economics of or the timing of the recharge is, but someone like Mike, who goes and takes the dogs in the morning and does his running around, and he could pull back onto his driveway and plug the car back in.
Mm-hmm.
Yeah, but keep in mind, Tesla's the first electric car maker that hasn't gone broke. It's the first one.
Yeah, you're right.
Lithium batteries. Look at the other disasters: Solyndra, A123. It's just been, and there's about 20 other smaller companies that have gone by the wayside. So Tesla made it.
Mike, whatever happened?
$70,000. It's a narrow market. Who could afford it?
Well,
I mean, whoever could afford that car really doesn't care about it.
You really think so?
$70,000?
No.
The average American person cannot afford a $70,000 or even two $70,000 cars.
That's
$70,000 for a coupe. You only get a couple people in.
Right, but it's a luxury
car.
It's a luxury
car.
It's somewhat of a dichotomy. The people who want to buy those cars can really afford the gas. The people who need those cars, they can't afford them. The people who are trying to save money on gas, they just can't afford $140,000 for 2 cars.
That's true.
But Casey,
this
is a luxury car.
Yeah.
If you compare it to luxury cars, it's not expensive.
It's your Mercedes-Benz, BMW.
Forget about Mercedes.
Crowd.
How about
Jaguar?
Not the most expensive one, but the second most expensive Hyundai at $68,000.
Exactly. Yeah.
Okay, but they're positioning themselves as we're a battery car, so you don't have to buy the gas. But we're going to charge you $70,000. Make a car that's $30,000 or $40,000 that the average household can afford, and save the money on gas. I mean, you could probably offset the money on gas for the.
You can do that. You can do that with the Chevy Volt.
Get a Ford Escape.
Yeah, but a Chevy Volt is $40,000.
Yeah, so is the Escape. If you buy the battery Escape. Yeah, the hybrid. Yeah. Eventually, Mike, whatever happened to that little battery car company? Leo Motors in Korea. Did anything ever come about with those guys?
It's the same thing.
Really. Wow.
No, they really haven't been able to prove up the technology at an economical basis.
Wow.
Let's welcome Dave Reichman of Treetop Industries.
Hello, Mike.
Welcome.
Thank you very much. I hope I got in on the right time.
That you did, Dave.
Yes. So just tell us a little bit about Treetop Industries. TTII is the symbol. Give us a little synopsis.
Well, Treetop Industries is kind of a mini conglomerate that seeks to find emerging technologies. And specifically what we do is we look for scientists who have technologies and need to develop them further and then bring them out to the public for use. Currently, we're focused on our eye care centers, which has been a demonstration project going on in Ecuador for the last 1.5 to 2 years with the World Without Blindness. It's a project that has taken Rockefeller University technology for visual evoked potential, and allows children who would otherwise grow up with eye disease, being blind, and have other diseases, to be identified at the early stage and have intervention. And that has met with some great success to date.
So now, are the ophthalmologists working on this program, are they Ecuadorians, or are they U.S. docs?
Well, that's thank you. That's a great question. The World Without Blindness is staffed with doctors from the U.S. And specifically from the New York Eye Infirmary, and the chief of glaucoma, Dr. Tello, has started this project. And the reason for that is he was an Ecuadorian, or I should say he is an Ecuadorian, who came to the United States in his early 20s. And he has wanted to give back to his homeland, if you will, given his great success here in the United States. And so the interesting part about all of this is that the testing that we are providing through this program is does not require to have ophthalmologists or opticians take the child's test, but it can be done by any kind of technician. And I'm not putting it, making a derogatory comment. What I mean is they don't need medical training whatsoever because of the type of test that it is. I'm not sure if you have the PowerPoint presentation that the Tello Foundation provided to us, but the illustration is really a headband, and it is a test that where we normally go in and see letters that we're asked will cover one eye, and we're asked to read letters at different sizes and different font types. This is a test actually of what the potential of the eye is, and it's done by objectively with a screen, a TV screen, and the child is looking at things on the screen, toy, playing, what have you, and it's really about how the eye moves and interacts. And so it's not subjective that you and I are asked, is that a teddy bear? Can you see the E? Can you see the W? Can you read this line? And so by doing this kind of test, actually what's happened is they are able to catch before it becomes, if you will, permanent damage to the eye. And that signals are interpreted by some software that the World Without Blindness has developed, along with Rockefeller University software. And they read this back here in New York and then send back a medical report within 24 hours. In fact, it's posted on the World Without Blindness website, and there's a key code for that patient or the location to get, and they take that medical report and go to their local eye doctor if there is such a referral.
So, David, is the issue in this that there's not enough testing and screening, or is the issue that there's not enough continuing care, or is it a combination of both?
That's a great question. First of all, because this is objective, this is not subjective, it is basically not done here in the United States. And there are many reasons for it. One is that insurance does not pay for it because there's no cause for the screening. So as a result, that is not done. We're a kind of a cause-based medical system. You have something wrong, you recognize you have something wrong, now you go and ask for intervention. In this case, what we're trying to do, what Dr. Tello and his associates are trying to do, is say that we can stop various kinds of disease from happening and positively impact people's lives in the world by catching the irregularity, if you will, catching the disease, identifying points of intervention at this young age. This is done on a 6-month-old to a 12-year-old because they can do certain, in certain cases, surgical intervention at this age that can change the outlook of that person's life.
Wow.
Like the way that they diagnose early, like the, I don't know what the real term for it is, but the lazy eye syndrome in young kids.
Yeah, like muscle disease.
Where they correct it over a short-term period, very early on, and it's never an issue again.
That's correct. I would say it's similar. This goes to a much greater degree. The lazy eye can be identified.
Right.
These kinds of things cannot be identified because it's objective, and the subjectivity is we know that it should be there, and so we're saying it's not there. They don't see it.
Right.
In this case, what we're doing is going inside and finding out things that would otherwise be unknown until the effect of the disease or the problem is manifested.
Wow, this is fascinating. So are you, is this project just going on in Ecuador, or are you looking at a worldwide type of thing with this eventually?
Well, Treetop Industries has the rights to take the entire program worldwide. The world is a big forum, obviously. What we're looking to focus on is to take the program now that it has reached a level of where we have the results of the last year and a half. And what we're looking to do is take this program and develop it in major population areas such as India, Indonesia, China. Certainly it can be available everywhere. It takes a great deal to undertake this. Now let me try and explain the economic model for Treetop, if I may, with regard to this. It's really quite amazing. What we've developed with World Without Blindness is that we, Treetop, will pay them $5 per testing. And so we will go out and have this set up, and we think that paying them $5 and Treetop will earn $5. The total charge for this is anticipated to be $10. Now, here's what makes this fabulous. We think if we can go to India, that has a huge population, and we can take in this population for this test, we can give this to the government at a very low level so that they could effectively allow and want to provide this for the children. I don't want to get into the whole medical system, but obviously this is a tremendous advantage for them. Now, they're paying us $10. It's a minute amount of money. $5 goes to World Without Blindness to maintain and develop further technologies, and $5 goes to Treetop for the operation of this and to provide service worldwide. So that's what our beginning economic model looks like, and the numbers, of course, are dramatic as to who we can serve. And so we see this as one, we can do a tremendous service to people, and at the same time it can be a very nice economic model.
How long have you been public?
Treetop has been public 31 years now.
Okay.
31 years. That's half your life.
Yes, that's correct. Certainly I was not, Treetop was a company that had pre-existed my getting involved with it and had various other businesses.
Wow.
This is almost...
Talk about your oil project.
Oh, wow. Okay. Yeah, I was going to ask, how diversified are you? Okay. Let's talk about oil.
Okay. Well, certainly oil is, on everybody's thoughts every day. Treetop, in trying to find a way to monetize our emerging technologies and all of these programs, we have several others. We have been guided to and changed direction slightly to acquire revenue-generating business. And Treetop has never had a revenue-generating business before. And so in December 31 of last year, we acquired the assets of a oil and gas company, and included in that is a oil property, a leasehold property in Kansas, which has right now 11 operating wells, which we began pumping last Thursday. So this is a new, a very new and exciting venture for us, so that by providing revenue, it obviously changes and the ability of Treetop to perform and to continue the programs it has in acquiring emerging technologies.
Dave, did you say
How
Kansas?
many shares are outstanding?
Right now, there is something around 6 million shares outstanding.
Wow. Charles, what do you think?
Well, I'm looking at the chart. I'm wondering what happened in January that basically took the stock from not trading at all to trading up to the $1.20 area before coming back in here to the current area around 15 cents. Was there some sort of a merger or major acquisition, or I mean, because it was in that area in 2010 or 2011, no, 2010, and then it goes flat for basically from the middle of 2011 through the beginning of January this year. So basically 2 years of doing nothing, and then all of a sudden it explodes back to the upside.
Well, okay. What we did is just prior to the acquisition of the assets, of the oil and gas assets, and there are other assets involved in that company that are of substance, we did a reverse split, which changed the probably what the graph is showing.
Yeah.
And then, as all things go, nothing is always just good. There was some legal action after that,
right,
by the former operator of the property, of the oil wells. And although that doesn't have to do with Treetop directly, it went against the former corporation, the old corporation that owned the assets. It affected, we plummeted, I think in 1 day or 2 days, on trading of, I think, 90,000 some odd shares, if I recall what I saw. So that's what occurred there. And
what was the size of the reverse? Like 100 to 1?
100 to 1, that's correct.
Right, okay. Yeah, I'm not saying that's a bad thing. I'm just curious enough to want to know. Right.
No, I think it's important for everyone to know.
Right.
Certainly we did all of our filings and posted all the information. But I think it's great that we can bring it out on a show like this. And since that time, the stock has kind of creeped back up.
Right.
And we expect, as we realize revenues after this quarter, that the public would be receptive to that.
Right. So are you using the oil and gas properties or the energy properties in order to make money for the company and be able to do these humanitarian things, or they stand on their own, or I mean, I know that you're saying that the economics of the humanitarian stuff is, you know, not overwhelming as far as raw dollars go, but, you know, there's clearly room for expansion, and there is the, you know, somewhat altruistic nature of doing something, you know, like this blindness project that you're doing.
Yes, the scenario with the Eye Care Centers International and the other emerging technologies are to all make money as well. And so I don't want to give the idea that the oil is just going to support this project.
Yeah, no, I understand that. But it has to start somewhere.
Sure. And the population is dramatic that we're going to. You know, it's X billion, so the numbers are dramatic, or the potential for it can be very dramatic.
Mm-hmm.
The fact is that the oil business will raise capital, and so that can certainly take to underwrite these programs in the initial stage until they're brought to a commercialization level. Certainly, going with this program to Western world will have a different economic model, as and when we get that up. And with the oil business, we're actually in the oil business, and we anticipate, we have plans for expanding the business in the locale where it is, in Kansas, as well as elsewhere. We're looking at opportunities. So we're looking to, that is a business of its own, but it will support the entity.
Dave, what other emerging technologies are you guys interested in at Treetop?
Well, we're in the area of sustainable planet type of thing, and we have technology that is in toxic waste. We have some internet technology, and we are constantly looking for technologies that will jump, let's say, 2 generations, if you will. They're hard to find, but we're always looking for them. We're looking at security right now with regard to being able to maintain security of transportation of the containers, if you will. The containers that go on ships as well as that go on trucks.
Yeah.
We're looking at that at this moment. And we're involved with universities. I might say that we have other eye care emerging technology that incorporates a couple of universities, one right here in New York City, one in California, that all look to participate in various kinds of nanotechnology, which is being developed. So we have a broad view and are always receptive to these emerging technologies.
And all this stuff's on your website?
Most of it is. Our website may not be the most, what should I say, up-to-date type of website, but we try to maintain it.
And what is that for folks who may want to hit that?
The website address is www.TTIIOB.com.
Okay.
Let's, throw it open to questions in case anybody listening has a question.
You bet, yeah.
What is the number?
888-792-1590. Anybody in the U.S.? We got about 9 minutes left. Casey, what are your thoughts? Any questions for Dave?
No, I know Dave for a long time now. Great guy, great operator, great leader. Has some really great, unique vision. So, yeah, big fan. Huge fan of everything that he does.
Wow.
Thank you. I appreciate that.
Nice endorsement there, Dave. Mike, any questions for Dave? Michael, any questions for Dave at all?
No, I see really and a phenomenal opportunity here with so few shares outstanding. It really seems like it's really an opportunity.
Does the management own much stock, Dave?
I'm sorry, I didn't hear that.
Does the management own much stock?
Yes, I would say the management owns a substantial portion. There's probably 65% in management's hands.
Oh. So there's really nothing out. When you say that
there's very little.
When you say that the stock moved on 90,000 shares, it's easily understandable with 6 million shares outstanding, and a big chunk of that in non-selling hands.
Or that's correct. I didn't explain it correctly, but that's correct. We see it as a very exciting. The eye care center program is a fabulous program. I mean, in many different ways. But we see the whole idea of having a place to bring emerging technologies quite exciting. And hopefully we will be able to commercialize this toxic waste or the internet technology or the security technology if we're able to acquire that. It's very difficult to get scientists to understand how to commercialize their technology. So that has been a difficulty we've come up against over time, and it does take time to, all evolve.
I'm sure, Casey, you'd be the first one to admit that scientists just don't understand the marketing side of it, I guess, if you will, right?
It's a true division of the brain. They understand science, and the science part of the brain and the marketing part of the brain are so dramatically different. One is really conceptual, where the other is actual.
Dave,
very, very different.
Yeah, Dave, what have you explored the Vision project with some of the governments that you mentioned, i.e., India, China, Singapore?
No, we held off on doing that until we had the results of the program of our demonstration project,
okay.
The World Without Blindness demonstration project. We just received the results last week, and this PowerPoint is one of showing the result. And so that will be our next move, to contact the various government organizations to start moving ahead with it. We believe that they will be terribly excited with it.
Is this something like the UN could be into, or would you want to stay away from that?
Certainly, there's potential for that, and we can go to the UN. We had not thought of it, and I'm glad you mentioned it. We thought of it just as individual countries, but perhaps that's a smarter way. We just didn't want to get caught up with bureaucracy. We want to be able to get the technology, since it's non-invasive, it's not a big deal to operate. We want to get it out there as quickly as we can. But I appreciate that thought, and we certainly will look into the UN.
Well, and just even like I'm just thinking off the top of my head, like a service club like Lions International is very big into vision stuff, no matter what it is, and they're a worldwide group. If you could somehow get, say, a Lions or a Rotary or something like that to kind of back this with millions and millions of members around the world, that may be able to help you guys along as well.
Or a St. Jude.
Yeah. Well, yeah.
Because they specifically target kids.
Children's stuff, yeah. Oh, yeah. Yeah. Yeah, I mean, there's... Boy, I see all sorts of potential for something like this. I mean, yeah, when you're talking about testing babies, at say 6 months, I mean, this is mind-boggling. Because knowing just what I went through, because I had muscle diseases in my eyes, my vision was perfect, but I had muscle stuff. Well, had they known that, they probably wouldn't have carved my eyes up by the time I was 4 years old. I mean, there's all sorts of stuff possibilities here with this that are phenomenal. I mean, it sounds absolutely amazing. So, what's the stock symbol, Dave?
TTII.
TTII.
It's a great symbol.
Treetop Industries.
Thanks very much for all the information and coming on to the show.
Well, thank you all. We appreciate the opportunity to participate and to get the word out about both these developments for Treetop, which are terribly exciting.
Well, thank you so much, Dave, and welcome. And hey, keep us informed, okay? Let us know.
Our pleasure. We'll certainly keep you informed on the developments.
All right. A couple of minutes left, Charles.
We have a rule 17B.
Okay, Mike.
Disclosure that Princeton Research owns shares in this company.
Oh, okay.
We have not specifically been hired to do investor relations yet, although it's probably going to happen that we will do investor relations, as this is a newly developed company and they are just making their plans. We probably will do investor relations and get paid in shares. But to date, we have just bought shares for ourselves, and we probably own, say, 30,000 shares and have owned them for some good period of time now.
Wow. I'll tell you, Mike, this is an amazing story. And, you think about this kind of joking, and they used to say this in the entertainment business, an overnight success, right? 31 years old, Treetop Industries, and now look, I mean, they could really be on the cutting edge of something. Hey, guys, thank you so much, Charles. Have a great week. Don't forget the texting service with Charles Moskowitz, and, of course, Mike King, the newsletter, PrincetonResearch.com. Just head to the website. Casey Quintana over in Tampa Bay, Pipeline Nutrition. So head to that tsunami there, Casey, and we'll talk to you next week. This is WPSL Port Service.